Good evening, students. Welcome to the live coaching classes organized by Board of Studies ICAI. Today is the last session for the GST part of our discussion. We end our today's final discussion with the topic called Returns under GST Law. As a protocol, I wanted to have a quick confirmation from some of you students to with respect to the audio, availability of the video, and also the PowerPoint presentation. Once I hear from, once I get a confirmation from some of you, let me go ahead with my discussion. And parallelly, students, today's presentation, along with the material, has been hosted on ICAI website. So I request students to download that material because, as usual, we do some problems as a practice from today's session, right? And yes, then good evening. Great. Thanks for the confirmation, Anita. Now, before we start with today's discussion, a couple of questions that are raised from Namita. I'll take quickly these questions and then we will go ahead with our today's topic for discussion. In the last session, because of paucity of time, I couldn't take a few questions which were asked by Namita. Our questions are page number 23.4 with respect to advance ruling. Okay. It is written that authority for SGST in advance ruling is authority for CGST also. So why in the last point we said that authority is not appointed under state act not for central act. Page number 23.4. See, generally in Namita, the authority for state, authority for central. Any person who has been appointed as an advance ruling authority under the state jurisdiction, the same person will be deemed to be an advance ruling authority for central GST. It is a deeming fiction. Say from state authority, take example Haryana. Namita happens to be an additional commissioner. She happens to be an additional commissioner of state jurisdiction. Naveen happens to be an authority who is called as a joint commissioner, say under central GST. Now, Naveen will be represented from central GST. Namita will be represented from state GST. So these two offices, for the purpose of CGST, your Namita will be called as an advance ruling authority. For the purpose of state GST, Naveen will be called as a parallel authority. So coming to your point, page number 23.4, the government shall appoint officers not below the rank of a joint commissioner. The authority for advance ruling constituted under the provisions of state GST or UT GST shall be deemed to be, please underline that point, Namita, deemed to be authority. Now, there is a deeming fiction. I presume that the officer of state happens to be the officer of center. So this is a deeming fiction, Namita. Then say in section 98, okay. Third point says AAR may hear the applicant. The AAR may then examine the application along with the records and may also hear the applicant. Thereafter, he will pass an order either admitting or rejecting the application. So here, Namita, this point of hearing, why they give an opportunity of hearing? Whenever we file an application, the officer concerned authority will like to listen from you. Though you have given a written letter, they want to understand exactly what was your purpose of filing this application. So it is a process where they understand the question, what has been framed is in synchronization with section 98. That's all. Next question. So advance ruling is communicated to concerned officer. Yes, like advance ruling, once the ruling has been passed, three persons will get the communication. One is the concerned officer, second is your jurisdiction officer, third is the applicant. Who is the concerned officer? Now, if I fall under state jurisdiction, the central GST officer happens to be a concerned officer or vice versa. So the three parties will receive a communication with respect to the ruling which has been passed. And next question is again from Namita. So if agent is not able to transfer title of goods on principal behalf, will still he be covered under 86? This question needs a little more clarity, Namita. Why, let's say, the responsibility of principal and agent is unconditional. Any act done by the agent, principal and agent should be mutually held responsible. If there is no supply, then definitely, if it is a non-compliance with any of the provisions, principal shall also be held responsible. Then successor on page 20.10. Page 20.10. Okay. How is it different from legal representative? See, successor happens to be a blood relative. Legal representative could be a person whose name this particular property has been written as per the will. So blood relation, non-blood relation. A person who's having a estate, he could transfer that particular property to a trust. Possibility is there. Look from that particular point. Section 85 include transfer of business due to death. So if the owner dies, how business will be sold? Let me look at my 85. Liability to pay in transfer of business. If the business is transferred as a going concern, on death, Namita, if assuming that this business is carried on by his successors, look from that particular point of view. Business of, see, on death, just like that business does not get transferred, Namita, until and unless the legal representative or the successors take the position of the proprietor. The succession, that is transfer of business, does not happen. Last and final question, in section 88, in case of a company in liquidation, okay. If a private company is a subsidiary of a public company, then its directors are not liable, as it is treated as a public company. See, in case of directors, responsibility on the directors will not come as long as they are directors of a public company. If the directors happens to be a director of a private limited company, then yes, during the point of contravention, the directors of private limited company shall be held responsible. So these are the questions which I have in my question window. And then let's come back to our today's discussion. Now, Naveen, I can see your question, Naveen. Give me 2 minutes, maybe say 15 minutes. I'll take quickly today's questions, and then some problems are marked for practice. So let's have our recap chapter. That is, we will revise some of the topics which we have learned all along. We will answer those questions, and then we will come back to your question, Naveen. Right? Now, hope students, everyone is able to see my Excel file. Please confirm. Hope this Excel file is visible now. And I would recommend students, please download this particular material. Please download this material. Reason, these problems which I am making you to revise, these are the problems which you can expect from your examination point of view for 4 marks. This one question, I'll show you how the questions are being tested in your examination. Not guaranteed that these are the questions which will be tested. I'm just making you to summarize the provisions which are there in your institute material. Now let's start from the question number 1. Hope this Excel file is visible, students. Please do confirm if there is a problem with my Excel file. Now, examine the provisions of valuation on the basis of below given scenario. Now let me do little spacing so that you can easily see this. Yeah. So this is a question which has been set on the basis of valuation, students. The first question, clause A, is speaking like this. Mrs. XYZ Limited, a registered person in Haryana, supplied goods to their agent, Mr. X, who is a registered person in Rajasthan, for making further supply. So in the problem, there are 2 parties. One is XYZ Limited, second is Mr. X. X happens to be an agent of XYZ Limited. Goods supplied by Mrs. XYZ Limited is rupees 9 lakh. Okay. I think the question doesn't talk about the agent. I'll make it a little more clear. principal and Mr. X happens to be a agent. So XYZ Limited, a registered person in Haryana, makes supply to Mr. X. Goods supplied by XYZ Limited is rupees 9 lakhs. Above goods are supplied by Mr. X to an independent buyer for rupees 9.45 lakh. Open market value of the goods is rupees 9.5 lakhs. So what is the question? We have to answer what is the value as per section 15 read with relevant rules. So they have given three values here, students. XYZ Limited supplies the material to Mr. X. The value which is supplied is rupees 9 lakhs. And these goods have an open market value of 9.5 lakhs. And this agent, what is he doing? This agent, Mr. X, is supplying to an independent buyer who is not a related party for a sum of rupees 9.45 lakhs. So can someone give the answer? Which rule we will apply and what is the value to be considered as per section 15? What would be your answer? What would be your answer? Please mark your answer, students. Please elaborate the value also on the basis of reasoning with the justification. So there is no hard and fast rule that examination you have to quote section number or rule number. Examination questions may be framed to test your knowledge. They may ask a recovery under Rule 86, penal provisions under 122 or 123, a notice under Section 74, interest to be paid under Section 56. So examination questions may be connected with your section number. But when you answer the problem, it is not expected that you have to mandatorily quote your section or rule number. Yeah. I have got one answer that is from Namita. Namita says 9.45 lakhs. Okay. Others. Now, for answering this question, we have to fall back to Rule 29, which talks about valuation in case of a principal and agent. As per Rule 29, value of supply shall be open market value or at the consent of supplier, at the choice of supplier, shall be 90% of the value supplied by the recipient to an independent buyer. Now, this is what my Rule 29 talks about. When I look at Rule 29, this clearly says, first you look at open market value. There is a choice given to the supplier. Who is the supplier in this case? XYZ Private Limited. Mr. X happens to be agent. Now, when we look at this transaction, this gentleman, this entity XYZ Private Limited, this has got two choices. Choice number one, go as per OMB. Choice number two, OMB stands for my open market value, or 90% of the value adopted by the recipient. Right? Now, this is what my provisions say with respect to adoption of a value. Now, everyone know that OMV stands for open market value. So what if open market value is not available? I go for Rule 30 or Rule 31. When OMV not available. Application of Rule 30 or Rule 31. Now, this is how I adopt my valuation. Please recap your basics, what we have discussed. I recommend students, when you are attending the classes, have your institute material next to you. Also, I would recommend, please have your running notes, like say costing, financial accounting, or any other problems where to solve. Make a habit of making a running notes. The moment a topic comes on a specific topic, please go back to the respective chapters to recap what you have understood. The time is very crucial for you. I would recommend that you make an attempt to capture the data as much as possible for your quick understanding. Examinations, like say when you have alternate days exam, in a day's time, you have to recap for entire your syllabus. The only mechanism will help you is your running notes. Every chapter, when you practice, you make quick headings. Like you have this habit of green pen, pink pen, blue pen, black pen. Important aspects, put a different, like say pink color or green color pen. Headings, important aspects, put a different color. Regular aspects, make a running notes. Put circle for the key terminology. When you write an answer, certain terms should be present as it is. So this running notes will help you in your examination. Coming back, in the given problem, they have given me open market value. So here, this principal has got two choices. One, he can go as per OMV, or he can adopt 90% of the value adopted by the recipient. So here, you will give an answer saying that Mrs. XYZ Limited can adopt open market value, that is rupees 9.5 lakh or 90% of rupees 9.45 lakhs for the purpose of determining value of supply under section 15. This is how you give your answer. Now here, open market value is higher, 9.5 lakhs. The value adopted by the agent is 9.45 lakhs. Examination, when we don't know, what we will do? Best of the three, maximum of three. Let's go with that. XYZ Limited supplied for 9 lakhs. X supplied for 9.45. Open market value is higher. So benefit of doubt, a department officer may adopt highest of these three. That's how you have a tendency to give highest of these three. But that's not the right logic. You have to understand the rule. You have to understand how does the rule work. And you have to present in your examination how the value will be looked up for assessment. So hope this point is clear, Naveen and Namita. Naveen has an answer. Open market value is to be considered if the transaction is between related person. So 9.45 lakh shall be value of supply under section 15. Naveen says open market value or 90% of the price charged. Goods and agent is considered as supply under GST. Yes, Naveen, the last point comes into picture. Both Naveen and Namita, hope this point is clear, ma. Examination, how do you present your answer and what should be your value. So you will say that the principal has a choice to adopt either 9.5 lakh or 90% of 9.45 lakhs. This is how you have to give your answer. Now, let's move on to the next question. Next question, clause number B. Now, Mrs. Tractor Limited has got branches at 18 different states. Goods manufactured in the Tamil Nadu unit are supplied to their branch in Uttar Pradesh for making a further supply. Some of the goods supplied from Uttar Pradesh branch are exempted activity. Value of goods exempted activity. Let me just give a full stop here. So what do they say? In Uttar Pradesh branch, there are certain activities. That means there are certain supplies which are exempted. Why it is exempted? Maybe there is a whole exemption if supplied to agricultural activity or any other notification. So they say that Some of the goods supplied from Uttar Pradesh are exempted. Value of goods considered by Tamil Nadu branch is rupees 12 lakhs. Above goods are supplied by Uttar Pradesh branch to an independent buyer is for rupees 14 lakhs. Open market value of the goods is rupees 10.5 lakh. So here they have given, this is a transaction between facts, transaction between distinct persons. Now, Tractor Limited, from a branch in Tamil Nadu, they are sending the goods to a branch in UP. This is a transaction. So in this transaction, what they have given, OMB is rupees 10.5 lakh. Then my TV adopted, transaction value adopted is rupees 12 lakhs. And value at branch is rupees 14 lakhs. So students, I have three values they have given. The open market value is 10.5 lakhs. The Tamil Nadu has supplied the goods to Uttar Pradesh, that is the TV adopted, rupees 12 lakhs. And the value which is prevailing at branch is rupees 14 lakhs. So what should be your value? That is value of supply. I'll give you a minute. Please examine your provisions and come with your answer. Give what is a suitable answer. Think through. Don't be in a hurry. Evaluate all the given values and with a suitable reasoning, mark your answer. Namita has given an answer of rupees 12 lakhs. Okay. Transaction value adopted 12 lakhs. What basis, Namita? Why is it 12 lakhs? Why can't it be 14 lakhs? Why should we go only with the given value? What could be the reasoning, ma'am? And remember, students, whatever mistakes you can do, please do in the classroom. Your examination is not a platform to do any sort of R&D. Do your R&D in the live classes. Don't carry this research and development to your examination, quite costly. I have Sumit answer 14 lakhs. Priya says 10.5 lakh. Great. Let me give you the right answer. First and foremost, students, reference to Rule 28. Reference to Rule 28 deals with value of supply in relation to distinct person. Right? This is my starting point. So let me explain the basics, then we'll come back to the valuation. Supplier unit, recipient unit, and buyer. Now, supplier unit adopted the 12 lakhs. Recipient unit charged 14 lakhs. Now, as expected, as usual, students, the supplier has got two choices. The supplier has got two choices. What is that? Supplier can go as per OMB, or he has an option to adopt 90% of the value of the recipient to an independent buyer. So this is a choice which is available. This is a choice available in the hands of supplier. In between, I would say, we just do a small element. Yeah. So in case of a distinct person, that is a related party transaction, they say, if the recipient is in a position to avail ITC, value as per tax invoice shall be deemed to be transaction value. Now, my Rule 28 clearly mentions that. Look, in case if there is a related party transaction from Tamil Nadu, if I transfer to Uttar Pradesh, this recipient is in a position to claim input tax credit. If the buyer is in a position to claim input tax credit, they say, I will not question this. Whatever transaction value is there on the tax invoice, I'll go with that. So this only if there is a ITC at the receiving end. So, sir, what if there is no input tax available? Then the supplier has two choices. Option one, he can go with open market value, or at his option, he can adopt 90% of the value of the receiving unit when it is sold to an independent buyer, right? So these are the provisions what we have in relation to distinct person. Rule 28, 29. Students, just keep in mind, value is open market value or the value adopted by the recipient, 90% of that value. So coming back here, when we answer this question, we have to make a small assumption. Assumption 1. If the receiving unit is not entitled for ITC for the above transaction. For that, my answer 1. So what I'm saying, the buyer cannot claim input tax credit. So answer 1 would be, supplier has a choice to adopt open market value or 90% of the value considered by the recipient to an independent buyer. So this is what my law talks in relation to transaction between distinct person. XYZ Limited Tamil Nadu unit to XYZ Limited Uttar Pradesh. So here it would be OMV rupees 10.5 lakh or 90% of value at branch. 90% of the value at branch. That is 90% of 14 lakhs. This would be your answer when there is an assumption that the Uttar Pradesh branch cannot claim input tax credit. So either it could be 10.5 lakhs or 90% of 14 lakhs. Now, just a math, food for thought. 14 lakh, 50,000, 14.5 into 90%. It comes to 13 lakh, 5,000. The value considered by Tamil Nadu branch is 12 lakhs. Now, 12 lakhs is less than 13.5 lakh. So, open market value is 10.5, 90% value is 13.05. Now, here, what will the supplier do? As a CEO, as a CFO, if you happen to be handling this transaction, you will take into consideration 10.5 lakhs. Why do you adopt 10.5 lakhs? For the reason working capital. You pay GST, it goes and gets accumulated in the receiving unit. So instead of applying, say, with the respective 18% or 28%, instead of charging that at Tamil Nadu, you will adopt a lesser value, which is called 10.5 lakhs. Are we clear with this discussion? Any one of you have any doubts so far? Now, these are the practical questions which you will come across on a day-to-day basis. Clear? So Namita has Namita has given 12 lakhs, Sumita has given 14 lakhs, and Priya has given 10.5 lakhs. 10.5 lakhs, yes. Now, while giving your answer in your examination, students, I repeat once again, Priya, Sumit, and Namita, don't just confirm 14 lakhs or 12 lakhs or 10.5 lakhs. What you have to do is, you have to mention clearly what does your rule say, that is open market value, or at the option of the supplier, 90% of the value adopted by the receiving unit. You have to give these two options, and among these two, whichever is required, they'll adopt and they will consider for valuation. Right? So you have to present your answer neatly in this particular fashion. Now, before I go further, I'll give you a little food for thought in this particular transaction. Say, I'll just take this information to explain you practically how this particular problem will help you in analysis. Now, open market value, transaction value, now I have open market value, transaction value, valued branch. Look from Tamil Nadu perspective, look from Uttar Pradesh perspective. Sale, tax, total. Sale value, 12 lakhs. And in Tamil Nadu, 14 lakhs. Now, assuming 18% is the rate of tax. Assuming 18% is my rate of tax. Be very attentive. You are all going to be qualified chartered accountants. Every single calculation is important for you. Now, what did we made an assumption while solving this problem? We made an assumption that the receiving unit is not entitled for input tax credit. Now, look at this way. When Tamil Nadu is raising invoice for 12 lakhs, GST is 2 lakh 16, 14 lakh 16. Uttar Pradesh, when they receive the particular goods, they have to account debit purchases, credit inter-unit Tamil Nadu. I debit my purchases 14 lakh 16,000. I give a credit to other branch 14 lakh 16,000. But what am I doing? I'm selling at 14 lakhs. And what is the tax? It says 0. Now, this is my sale value. Now, overall, what is happening here? I'm making a loss of 16,000. Now, entity level, it is, Uttar Pradesh point of view, it is loss of 16,000. But unfortunately, this 2,16,000 is also going to my cost. It's going to hit to my P&L. So 2,16,000, top of that 16,000. This is going to be my burden to working capital issue. My money as a businessman, when I'm selling a product for 14 lakhs, I'm going to lose out 2,32,000. This 2,16,000 is something, if you look standalone from UP point of view, right? Now, 12 lakhs is actual cost. I'm selling for, now look at the other way. So I have assuming that Tamil Nadu, the cost is adopted for transaction. 14 lakhs minus 12 lakhs. So I made a profit of 2 lakhs. Now you will say, sir, you made a profit of 2 lakhs at the base level. So what happens to your cost? That is your 2,16,000. I overall made a loss of 16,000. So here, entity level and departmental costing. When I do a departmental costing, there is a loss at a department. When I do entity level, there is an overall loss of 16,000. Now, this is a math which comes into picture when you look into your valuation under related party transactions. Right? Let's move on further. Next. Third question. Examine the place of supply. Now, this is a problem based on POS concept. Now, the question says, Mrs. ABC and Co., a firm of architect, have given their services to Mr. A in relation to the properties owned by Mr. A as below. Property situated in London, property located in Kerala. Assume that the consultant fees is charged for the opinion given to both the contracts under a single contract. So here, there is a service rendered in relation to immovable property. Now, in relation to immovable property, Section 12, that is service provider, recipient is in India. Section 13, service provider or recipient, either of these parties is located outside India. If assume that this gentleman, Mr. A, is located outside India. Now, so this firm is giving a consultation services to Mr. A in relation to architecture service. There's one contract where they did a performance in property in London. They also did a performance for a property in Kerala. So what would be your answer? Is the place of supply considered to be outside India, or the place of supply considered to be India? If you say place of supply is considered to be India, is it the firm, the ABC and Co., they are located, or is it Kerala? What would be your answer? What would be your answer? Good. Sumit has got a question continuation to the distinct person. So Sumit is asking, sir, what if ITC is available? So simple, Sumit, they'll not question your open market value. They don't even question 90% of the recipient value. They'll say whatever value is there in the invoice, that is deemed to be a transaction value. No question of testing your valuation. Hope this is clear, Sumit. Further, Sumit is making this question. Sir, if ITC is available, then any value can be adopted. Can the supply value be even ₹1? Answer is yes. But this is like, you can definitely adopt ₹1, Sumit. There is an accumulation of input tax in the state of Tamil Nadu, and there is a cash outflow which happens in the state of Uttar Pradesh. So not to have this exposure. Sumit, your question is valid. For benefit of doubt other students, what Sumit says, sir, in the previous tractor case example, instead of adopting 12 lakhs, can I adopt ₹1 as per invoice? And for a moment, let us assume that Uttar Pradesh can take the input tax. Now, answer is yes. Now, what happens here, Sumit? 14 lakhs, which was built from Uttar Pradesh, on that 18%. To that extent, I have to make the cash, by GST from electronic cash ledger. Rather, if I bill it 12 lakhs, electronic credit ledger, the duty gets passed on from here to the other unit. So this is the logic for going with the proper values. Naveen says, so we can adopt different values for multiple transactions with the same branch. Like say for one transaction open market value, another for 90%. Answer, yes. You have a choice. Like, you can go with open market value or you can go with your 90% value. But you are bound to establish that open market value, Naveen. Now, answer for the next question. Naveen says that in relation to place of supply. Place of supply is in relation to immovable property shall be the location of such property. So place of supply shall be outside India. Place of supply, A, place outside India. For B, it is Kerala. Okay. Naveen has got two answers. Naveen, I would recommend revisit to that. Akshay Mantri says POS is India as one of the services in India. Perfect. Answer is right. So, students, please recap. When we are talking about place of supply, Section 13 very clearly says, in relation to immovable property, where the property is located, that shall be the place of supply. So, what if, in connection to a contract, some portion of the contract is rendered in India? Section 13 has got this connection where it says, So I think the section 13, subsection 5, where a performance is done outside India and also a portion of service is done in India, it shall be deemed that the place where the activity is done, that shall be your place of supply. So your answer would be reference to section 13. Now, when I talk about section 13, please keep in mind, this talks about a transaction where my supplier or recipient, either of the person is located in India and one person is outside India. Now, in relation to immovable property, section 13, subsection 4. Are relevant. As per section 13(4), place of supply shall be the place where immovable property, I'll say IP. IP stands for immovable property, is situated. However, as per the contract, since the performance is partly done in Kerala, as per section 13, subsection 6, place of supply shall be Kerala. This would be your answer. So here you will say that since as per one contract, portion of the work is done in London, portion of the work is done in Kerala, the place of supply happens to be Kerala. This is your answer will be given. Examination, again and again I'm telling you, no need to mug up your sections, but please remember the provisions, how do you present in your examination. Namita says place of supply is Kerala, both supplies are single contract. Yes, Namita. Next, question number 3. Examine the provisions of registration requirement where, okay, these are the questions which have been framed from your registration point of view. I would recommend students to open your institute material, I think module 2. This particular problem, before I solve, I would like to look at your institute material. Page number 9.14. Page number 9.14. There's one particular summary they have given. State-wise, what is the value for goods? What is the value for goods and services? 9.14. Fantastic compilation. Take it from the students. Like always, the students ask, sir, which is the best material we have to refer? I would say Board of Studies is the best material. Reason, examination point of view, they are simplified and also they are given examples at the end of each chapter for you to easily recap from your examination point of view. And just to say, couple of questions are straight away lifted from your institute material. Reason, few questions will be tested the way it is asked in your institute material. Only when you look at the question paper and come back to institute material, you realize, oh, this question I should have read from institute material. That's how questions are generally set from institute material. Now, this particular chapter is from registration, chapter 9 of your institute material. All of you open your module number 2. Module number 2. First question. Mr. A draws salary from a company for 45 lakhs. And in addition, he has got a trading activity in stock market for rupees 12 lakhs. Now, is Mr. A required to get registered? Yes or no? A draws salary income 45 lakhs. He also has got a trading activity in secondary market where he has an income of 12 lakhs. So what would be our students? But A, what would you advise? Should he need to register? Yes or no? Should he need to register? Yes or no? Quickly, give your answer. A has a salary income and also income from stocks and shares. Suraj says no. Naveen says as per schedule 3, no. Akshay also says no. Perfect. All of you are right. Actually, there's no trading e-commerce business over here. Ma. They do, in this Mr. A does a purchase and sale of shares. There's no e-commerce transaction here. So, answer would be no. Mr. A is not required to register under GST. As per Schedule 3, salary is neither supply of goods nor supply of services. Also, it's say stocks and shares are neither goods nor services for the purpose of GST. So my both definition of goods and services exclude your securities. So this is how you are answerable. Next, question number B. Mr. P. Mr. P, a trader in dry fruits, has his place of business in Jammu and Kashmir. He undertakes supply contract to his customer in Delhi. Mr. P has a last year financial year annual aggregate turnover of rupees 8 lakhs. So they have given a problem where this gentleman, Mr. P, is a resident of Jammu and Kashmir. He has last year aggregate turnover of rupees 8 lakhs. And he has undertaken one transaction where he supplied the dry fruits from his place of business of Jammu and Kashmir to a particular customer who is there in Delhi. So what would be your answer? Can we say that 20 lakhs there is a threshold limit, or should Mr. P need to register? What would be your answer? Sumit, this 1% of sale value, okay, this is not actually 12 lakhs is a sale value, Sumit. 12 lakhs is a income what he has generated, right? Now, only for the purpose of your input tax reversal, that is section 17, there the provision says that in case of an immovable property, the value adopted for registration. In case of securities, that is your 1% of sale value. So here, 12 lakhs is not sale value, Sumit. It is a income generated. Income is nothing but purchase value, sale value minus purchase value. So this 1% cannot be applied straight around that 20 lakhs now, right? Now, Naveen has an answer. So it is an interstate supply liable to register under section 24. Perfect. Akshay says applicable as it is an interstate supply. Very good. Now, look at your page number 9.14, students. This 9.14 gives you absolute clarity. Each state-wise, in case of goods, in case of services, how do I understand? So for that reason, I was drawing your attention. When you go back, people who don't have institute material, please look at your page number 9.14. I would say examination point of view, just look at this page before your exam. Reason, there are certain things you just need to carry just a day before exam. I mean, you cannot carry in your memory all along. So answer for this, it is yes. Mr. P has to register as per the provisions of section 24, that is compulsory registration for undertaking interstate supply. Because there is an interstate supply, the gentleman P has to take a registration. Though his threshold limit, look at your page number 9.14. His threshold limit is 40 lakhs in Jammu and Kashmir. Last year it was 8 lakhs. Now this year it didn't exceed the threshold limit of 40 lakhs. But still, applying section 24, you would say that there is a compulsory registration to be obtained. Good. Next, point number C. Mrs. C, a resident of Tripura. Mrs. C, a resident of Tripura, is a health and fitness center, health and fitness trainer. She conducts online coaching classes to her students. She doesn't have the details of all the students. Her total income is in the previous series rupees 12 lakhs. Now, these days everything is online. Even this coaching classes is electronic. So this lady, she happens to be a resident of Tripura, state of Tripura. She is a health and fitness trainer. Now, this health and fitness, you can make an assumption that this is not undertaken as yoga. This is other than yoga. So if she is drawing an income of 12 lakhs in the previous year, what would be her status of registration? What would be your answer? Akshay is well ahead of me. Akshay says she has exceeded the turnover limit and she is liable for registration. Very good, Akshay. Students, again, I draw your attention to 9.14. Tripura, in case of services, goods and services, 10 lakhs is the threshold limit. Since she has exceeded the 10 lakhs, Mrs. C is liable for registration in the previous year since she has exceeded the threshold limit of rupees 10 lakhs in the previous year. So this would be your answer. Next question. Clause D. Mr. A newly qualified chartered accountant, is applicable for most of you are listening to me. A newly qualified chartered accountant opens his practice in the state of Telangana. He has not opted for registration due to the threshold limit. So newly qualified, definitely they will not have billing of 20 lakhs. So this gentleman has not registered. He imports cloud services from CLS Incorporated for $100 for his office data storage on the cloud. Now these days, everyone knows that cloud services are the booming industry. Even most of our offices, we work remotely. So this gentleman who has opened his office, he has downloaded a software from CLC Incorporated for $100. So what will be your answer? Is Mr. A required to register? Yes, Priya, your answer is correct, ma'am. Sumit, yes, you have given the answer. Namita says, as she does not have details of students, so Miss C, that is Tripura, is place of supply. So 10 lakhs limit considered. Yes, Namita, you have gone one step ahead of answering. In addition to registration, you also gave answer on place of supply. I appreciate that. Tripura happens to be the place of supply. Section 12 holds good, right, Namita? So with respect to this gentleman A, young newly qualified chartered accountant, like you, it's a question for you. Down the line, you are going to get into the practice. Sumit is again first to give the answer. Sumit says that under reverse charge, he is liable to get registration without any limit. Section 24. Perfect. So here you will see that as per section 24, which deals with your compulsory registration. Since Mr. A is liable to pay tax on RCM basis, registration is required for Mr. A. This would be your answer. Perfect. Now, let's move on further. Question number 4. Mrs. XYZ Limited has issued an invoice for supply of goods having the GST input tax credit of rupees 125 lakhs. The above supply invoice has been issued without actual movement of goods. Examine the relevant provisions of GST for the above supply. So this is a transaction where this entity called XYZ Limited, they have issued an invoice where the tax involved is rupees 125 lakhs. But actually, the goods movement didn't happen, means they didn't supply the goods. There's a contravention. Without supplying the goods, XYZ Limited has raised the invoice where the contravention is to the amount of 125 lakhs. So, what are the provisions? What comes into your mind? Is it a penalty under section 122 or something else? This entity XYZ Limited has to face the penal provisions under 122 or something else. What comes into your mind? Akshay, for this chartered accountant's case, Akshay, threshold limit is required under section 22, but 24 overrides section 22. Section 24 says that compulsory registration if you're liable to pay tax under reverse charge mechanism. So that's how you have to read the Akshay. Sumit has an answer. Sumit says that, sir, input tax is not available in the hands of recipient because the goods are not received. It is a block credit under section 16. Not completely correct, Sumit. Something big is happening. Something beyond that. All along, I was talking about offenses and penalties. Your serious contraventions. It is not block credit. Something beyond that. Something beyond that. All of you come to your module number 3. Module number 3, page number 21.16. Page number 21.16. Priya says penalty under section 122(1)(2) is applicable. Section 122, okay. Now, for what answer Priya has given, look at your page number 21.4. Priya says under subsection section 122, subsection 1, clause 2, issue of an invoice or bill without supply of goods, which is a bogus invoice. Yes, Priya, your answer is correct to the extent of section 122. But the moment you see this amount of 125 lakhs, look something beyond that. Section 132, where there is a punishable offense, cognizable, non-cognizable. So this is a cognizable offense. Yes, Namita, you're right now. Look at your page number 21.16. Page number 21.16 of your institute material, where they have given amount-based offenses. Since this is an offense where the input tax 125 lakhs exceeds 1 crore, less than 2 crore, there is a punishment, that is imprisonment of 1 year with a fine. So you will answer the moment you say serious offenses exceeding a sum of rupees 1 crore, section 132 should come into your mind, right? So this is a question framed under section 132. Expect one question from this item for the simple reason, a lot of offenses happening under this culpable, where there is a mens rea. Expect one question from offenses and penalties, section 122 till section 132. Don't miss, wait and watch. Next, moving on again. I'm not saying that this is going to be there for sure, but I'm just making a guess for this segment. So to answer this question, students, you refer to page 21.16 under section 132. It is a punishable offense with imprisonment of 1 year and fine. Right? This is the above activity of Mrs. XYZ Limited is a cognizable offense. That means it is a punishment without warrant. So arrest can be done without a warrant. There is no bail. It is a non-bailable offense. Sumit is asking this question, sir, examination, can I refer to a section without a subsection? 100% Sumit. I again and again confirm, if you don't quote the section, you can just say as per the provisions of GST law. Sir, if I remember only section 132, I don't remember subsection 1, 2, 3, 4. It's good, you can quote section 132. As per the provisions of section 132, I can confirm. Absolutely okay. But giving a wrong reference, there is an impact. The examiner deducts half mark. And the weightage of half mark, the weightage of 1 mark, ask a student who got 39. Ask a student who got 49. Ask a student who got 59. A student who got 39 should get 1 mark to get a pass mark. A student who got 49 should get 1 mark for an aggregate of 50. A student who got 59 should get 1 mark for exemption. So every mark gets counted in your examination. For that reason, I always caution, quote the section number only if you're confident, right? Moving on, next. Last question for the day. Examine the relevance of unjust enrichment under GST in relation to refund application filed under section 54. So with respect to refund, there is a topic called unjust enrichment. What is the importance of this unjust enrichment? What is the value of unjust enrichment? So we have discussed while discussing this topic, section 54. Unjust enrichment deals with not passing on the burden of tax to some other person. Like example, Mr. A sells goods worth rupees 1 lakh and collects rupees, say 18,000 from Mr. B. Mr. A files a refund application for wrong levy under section 54 with authority consent. Now here, what happened? A has collected that 1 lakh. From whom? From B has collected. And this 1 lakh was paid to the government. Now here was the burden, or no, this onus, the burden of this 18,000, is it on Mr. A or Mr. B? Mr. B has paid 1,18,000 to A. So when I talk about this unjust enrichment, please keep in mind, this unjust enrichment talks on whose shoulder this tax burden is there. Is it lying with the supplier or is it passed on to the recipient? This is what important for your unjust enrichment, right? So with respect to unjust enrichment, there are few provisions where the principle of unjust enrichment is not tested. Now, few cases, I need not test unjust enrichment where, like example, clause A, export with payment of IGST. Like example, say I'm a supplier in Telangana, I export goods to Germany with payment of IGST. So what happens? I export the goods, but not the taxes. The moment I pay tax, I get an automatic refund on the basis of the shipping bill fine, on the basis of GSTR-1 Now here, did I pass on the tax burden to my customer who is there in Germany? No, I didn't pass on. Similarly for services, export with payment of IGST, this is for goods and services. So goods and services, when I have exported with payment of IGST, I need not prove that there is a burden on the recipient. Reason, none of the recipient who is there abroad will agree to pay the taxes. Right? This is the first point. Second point, accumulation of ITC in relation to zero rated supply. Sir, I have a zero rated supply. Exports or supplies to SEZ. I don't charge IGST. I take a LUT or bond. So what I do? I bill to Namita 1 lakh. Namita happens to be SEZ unit. So for a moment, Naveen happens to be a party in London. I supply goods worth 10 lakhs to Naveen in London. Whatever purchases I do, it gets accumulated in my balance sheet. When you look at my current asset, there's an accumulation of balances. So this is how my accumulation happens. So on account of accumulation, I need not do a burden. So whatever taxes I have paid, I have not passed on to my customer. Look at my balance sheet, current asset. It shows that money is accumulated on account of my zero rated supply. See, accumulation on account of inverted duty structure. We had discussed this problem of what you call this tanker, the water tank, which is fitted onto a tractor in relation to agricultural activity. When I buy steel, when I buy paint, when I buy consumables, steel is at 18%, so paints is at 28%, labor 18%, consumables 28%. When I sell the oil tank, this water tank, it is taxed at 12%. So there is an accumulation of 6% ITC. It's a genuine accumulation. I don't have, I will not pass on that to my customer. Reason, I charge only 12%, whereas 18% I'm paying on my purchases. I need not prove to my GST authorities. B, in case of taxes paid on advances and such advance refunded without rendering service. No supply nor tax invoice. So I have received money from my customer. I didn't raise a tax invoice nor I did supply the services to my customer. Right? So in this case, I can claim a refund of my input tax where I need not do the unjust enrichment. And for this, I draw your attention. Please look at your institute material, page number 15.52. And for some of you are listening to me, this is a question which has been tested in last June 2021. This is a question which was tested for 4 months. Straight away, a question which was lifted from your institute material. So for that reason, I would recommend all of you, don't neglect your institute material. Every topic, end of your questions, no, there is something called test your knowledge. Please look at those questions, at least for sure. Reason 8 marks to 12 marks, the questions gets carried out to your examination just like that. Now, yes, Sumit. Sumit is saying that the refund should be provided to only that person who has paid the tax and who is holding the burden of that particular taxes. So far, so good. Now, let me come to my presentation for today. Starting with today's discussion, returns under GST law. This returns under GST law is a fag end of our discussion in your institute material. Examination point of view, I wouldn't see so much of importance you have from examination point of view, but for a question on QRMP scheme, that is quarterly return, monthly payment. But for this particular scheme, I don't see any questions which could be tested in your examination. And return filing, what are the due dates and what is the late fee? I seldom see a question from this particular chapter called returns. So we will just understand various returns, what are the complexity there in this returns, and then we will have the conclusion for today. So today I'm going to take you through various returns which are available. And in the process of these returns, I'll take you through a couple of examples how returns are important when we have to disclose the information in relation to filing of returns. Now, last class, as I say, promise, there are 2 topics which were missed out from your miscellaneous provisions. First, I will take up those miscellaneous provisions. Then I will touch upon your returns for today's topic. So miscellaneous provisions, section 172, which talks about removal of difficulties. As on date, there are 17 orders passed under section 172. It so happens that when the provision of a particular section fails to get implemented, when there is an interpretation issue in respect to a particular clause. A simple example, section 10, which deals with your composition. Examination, again, expect 1 question for 4 marks from the chapter called composition. A pet topic. Examine the conditions for a registered person to get into composition registration. Mr. A has got, they will give few supplies and they'll give some activities in relation to manufacture, some activities in relation to trading activity. Calculate the rate of tax, calculate the amount of tax to be paid by the registered person under section 10. So 4 marks is a weightage for your composition scheme. Initially, July 2017, August 2017, when GST law was implemented, many people had this difficulty to implement, to understand section 10. When they talk about the compliances under section 10, one of the condition, the person who is interested to register under section 10 should not be dealing with services. He should not be rendering the services having a registration in the composition registration. So it has become very difficult for someone to understand. So you're saying one way to opt for registration. On the other hand, you're saying that to be eligible, the registered person should not be dealing with supply of services. Unfortunately, the supply of services that your interest income happens to be an exempted activity. So you're saying that there should not be a supply of services which are not liable for tax. So what will you do with that? There came the first removal of difficulty under section 172, where they've clarified for the purpose of your section 10, this interest income shall not be considered as a exempted activity. You need not consider the turnover of this particular interest from fixed deposits, interest of loans and advances. Right? So this is how this section 172 will be knocked out wherever there is a difficulty in understanding my provisions of GST law. So look at the taxman. The tax maker is looking at these various provisions, how to use this particular section 172 as a tool. Now, this particular first order came on 13th October 2017, where they said that a person who is supplying goods and services under section 10, right? So in that case, any income which is drawn by way of services by way of extending deposits, loans, and advances, insofar as this consideration is received by way of interest, shall not be considered for the purpose. It shall not be ineligible for the purpose of your section 10. So this was the first removal of difficulty order passed under section 172. So this section says that in the process of implementing the law, wherever there is a difficulty, this government may, by the recommendations of the council, unfortunately, this phrase recommendation of the council has become a rubber stamp. Whether or not council made a recommendation, they invoke a particular provision by stressing upon recommendation of the council. And they know that council is going to ratify their decisions by a general or special order. So what is the general order? What is the special order? General order where it is given in general. Special order where there is a specific element of clauses, specific element of phrases with a specific purpose. So there could be a condition which is specific to a particular section. There could be a condition which is in general for the overall implementation. Like example, extension of time limit for filing of returns. It is a general order. All the registered persons, when COVID has hit 2020, it was a very great demand that I have to give an extension for filing of your returns. The moment that there is extension, what happens to my input tax credit? That also gets extended. When GSTR-1 due date has been extended, the time limit for input tax availment, the condition imposed under section 37, read with rule 36. All conditions parallelly gets extended. So there is a authority given under section 172 to give a particular order. This order has got so much of weightage. Wherever there is a blockage in terms of interpreting the law, that blockage is removed by section 172. Right? So it makes such provisions which are not inconsistent with the provisions of the law. They give a clarity by that this order is given to remove the difficulty of interpretation. This is the purpose of my section 172. And year on year, initially when the law has come, this particular section 172 was given a time limit of 3 years. 3 got extended to 4, 4 got extended to 5. Reason, the GST is not stable. Every year they are coming with the new problems. For overcoming new problems, they are coming with this removal of difficulty order. And look at this term. Initially it was 3 years. That is, by 2020, section 172 should have seen a sunset. But they have extended 5 years. So as on today, still 172 is in existence. Any law which they felt that it is inconsistent, like if you remember last class, AAP, App and Co-Chartered Accountants, fantastic case in Gujarat High Court. When I read that first, that particular judgment, I've appreciated being a chartered accountant. So much of interpretation went in to say what is written under section 39, which has been notified as GSTR-3, not GSTR-3B. Interpretation of statutes, interpretation of provisions. So this particular removal of difficulty, the officers felt like, let us continue for another 1 year. So 3 has become 4, 4 has become 5. So as on today, 5 years is the time limit for section 172. So wherever there is a blockage, they invoke section 172, they pass an order. And once the order is passed, it is binding on the department officers. And every order passed under this particular section has to be laid before each house of the parliament. And as you are aware, sir, there is no parliament, there is no winter session, there is no summer session. What to do? Pass an order. Let's see what happens. Whenever there is a parliament session which is going to take place, that point in time, I'll place it before parliament for ratification. And unfortunately, many of these provisions get through, like a rubber stamp. In the entire upper house and lower house, probably there could be 5% of people who are diligent in terms of reading minutely each and every aspect which was put before the parliament for approval. So this is how the decisions take place with respect to ratification of orders under Section 172. The last leg of your provision called anti-profiting. I'll give an example. A fantastic tool, unfortunately, went into shadows. Anti-profiting, Section 171. Let us take example of this MRP based products. Say, let me talk about soap, okay, detergent soap. I'll not name the brand. This is going on recording, so I'll not name a brand. Let's take an example. A detergent soap, pack of 4 pieces or pack of 5 pieces. MRP is rupees 150. MRP is rupees 150. And you all know something called Legal Metrology Act. As per this, inclusive of taxes. And the beauty of CA curriculum, once you get qualified, the kind of confidence, the kind of courage you get, the moment you get qualified and you get into the position of a CEO, CFO, or the finance manager, each and every activity, wherever there is a business issue, the first person will be looked upon is a qualified professional. In the industry, you get so much of exposure, you wouldn't imagine sky is the limit. And all the subjects, take it from me, costing, financial accounting, income tax, indirect taxation, your the other IT related paper. The subjects of all these papers is going to put you into fulcrum where you visualize 360 degrees to tackle with those cases. Something like first time when I got qualified, there was an issue with respect to this legal metrology. There was a product which was sold with a MRP. When a product was sold with an MRP, there is a custom that you have to give basic details of disclosure, and also you have to take a permission from an authority concerned. Every year, you have to get a calibration of your measurement products. Like you have, say, 5 pieces, or you have 10 grams, you have 100 grams. All your measurement instruments, you need to get it validated on by the government officer. You go to this government office to get the the measurement instruments will get calibrated by the officer. They do measurement and they do give a certificate that these instruments are in working provision. Coming back. So this particular detergent soap is having a MRP of 150 rupees. Assuming that rate of tax is 18%. Rate of tax is 18%. Now, I happen to be a seller. When I sell this particular pack at 150, I have to pay tax. So how much my tax happens to be? I receive 150 rupees from my customer. So what I'll do? 150 into 18 divided by 118. Look at this calculation carefully. I have numerator of 18. I have a denominator of 118. What am I doing here? This 150 rupees includes my taxes. That's why I have put my denominator as 118. So this tax happens to be 22 rupees 88 paisa. Right? Now, there is a GST Council meeting on November 20. November 2020, just for a discussion purpose. In this particular council discussion, they have said any soaps which are herbal products, there is a clarification that the rate of tax is 12%. The government has decided that any products which are sold as a herbal products, which meets the norms of this herbal, then the rate of tax happens to be 12%. Now, I'll take this on the right hand side. Now, assuming this is my October 20 scenario. 1st November 2020, the news have come officially. November 2020, I sell the same products at 150 and my rate of tax at 12%. 150 into 12 divided by 112. My rate of tax, which is going to government, is 16 rupees 70 paisa. Now, is something wrong here? Is the government getting the right tax? Is the customer paying the proper price? What is your understanding? In the entire discussion, October 2020, I happen to be the shop owner. I've paid a tax of 22 rupees 88 paisa to the government. In the month of November 2020, I happen to paying 16 rupees 7 paisa. Is everything correct? Or something fishy? Food for thought. Now, this is a scenario where anti-profiting means at the cost of taxation, the seller is making a profit. So here you can see a margin. I would say margin or revenue. Now, revenue of the shop owner is 22.8. So when you imagine your P&L account, I receive 150 rupees. I park 22.88 in my balance sheet as a current liability. I park 127 rupees 12 paisa into my P&L as my revenue. This is my October 20. The same supply in the month of November 2020. When I've sold the goods for 150, I parked my 16 rupees 7 paisa into my balance sheet as current liability. That is the money tax to be paid to the government. I parked my P&L of 133 rupees 93 paisa. Now, what is happening here? I have made a benefit of rupees 6 rupee 81 paisa. 6 rupees 81 paisa is a benefit to me as a seller because of a decision made by government, right? Now, this element is called anti-profiteering. Remember your note bandi, where your old notes were called back. The government has decided to come back with the new 500 rupee and 2000 rupee notes, where everyone has imagined, so this day is going to be a great day. The next day morning when we get up and see, I would see the old currency notes, maybe in the streets, maybe in the dustbin, maybe floating on river Ganga, maybe floating on river Kaveri. We had a lot of expectation when this note banning happened. Similarly, when GST has come, everyone has a huge expectation with respect to your anti-profiteering. Reason, your opening up of input tax credit, seamless ITC. Earlier, excise duty, VAT was charged on ED. VAT was charged on special additional duty when goods have been imported. There was a levy of CST on central excise. So all these commodities where there was a closing stock, there was a floodgates open for input tax credit. There was this one provision called Section 140, which was dealing with your carry forward of taxes from existing law. A fantastic provision. I thoroughly appreciated this Section 140 when it has come into picture. Unfortunately, there was a dilution of this entire seamless flow of input tax credit. And when actually the day has come for passing on the benefit of your tax loss by way of anti-profiteering. I don't know how many of you have seen this change. When we go to a shop to buy a toothpaste, middle class, we buy a toothpaste at say rupees 45 for 100 grams tube. After GST has come, this 45 either remained at 45 or it went up to 47 or 48. The price was attributed to inflation. When we have purchased 1 kg of tur dal for rupees, say 120 rupees, we hope because it was a branded product, this 120 rupees would have come down to 115 or at least say 110 rupees. Unfortunately, 120 remained at 120 or it picked at 122. The benefit of passing on input tax credit and anti-profiteering never seen its stage, but for few cases. There were few netizens who have filed a case on famous brands like your chocolate or the other products, saying that the anti-profiting clause has come. I should have reduced, like Maggi noodles. There was a famous case law in respect of Maggi noodles. What they have said, sir, prior to GST, I was paying 5 rupees. After GST, I'm paying same 5 rupees. There was no anti-profiting. There was no accumulation of, there is no benefit of income tax passed on. All these were the cases which have knocked at the door of this anti-profiting authority. Unfortunately, fortunately, this Maggi manufacturer has come forward saying that, my dear GST officer, earlier I was selling 100 grams of noodles. Now I'm selling 120 grams of noodles. There was a 20 grams of noodles which have increased. That was a increase in the product just to cap that 5 rupees. Similarly, Hindustan Unilever also has come with an explanation. All these products which have been sold, 100 grams I have made as 122 grams or 125 grams. Now they have increased the marginal capacity. Now, was the space increased or was the weight increased? Was the product increased? God only knows. So these are the provisions which are connected with anti-profiteering, which was discussed under section 171. So, and this anti-profiteering under section 171 says that wherever there is a reduction in rate of tax, every time. Now, this anti-profiteering, I would recommend all of you to look at from your business decision point of view. You happens to be a CFO heading an organization. Whenever the government comes with a rate reduction, look and watch for this anti-profiteering mechanism. Where you are dealing with the products of MRP. I buy a HP toner, I buy a ink cartridge, which is having an MRP of say 450 rupees. What happened to all this anti-profiting when there is a reduction in rate of tax? Wait and watch for this provision as long as there is an impact on reduction in rate of tax, especially on MRP based products. All, I could see in my question window, students are giving examples. I'll not take the examples of those brands, and all your points are valid. I absolutely agree with you. This being a recorded session, let's go with silence on the brands. But yes, wherever there is a rate change, we haven't seen those particular impact. Section 171 has come as a safeguard mechanism. So in this section says that when the government has reduced rate of tax or when the government has given benefit of input tax credit, the input tax credit was blockaged, suddenly government has opened up that mechanism. When these two incidents happen, then the registered person shall pass to the recipient by way of a commensurate reduction in prices. I don't know how many of you have seen when a particular commodity was purchased from a manufacturer, the manufacturer sold, the cost of a product is say 125 rupees, less this benefit of ITC under section 140, 2 rupees. There are a few people on the face of the invoice, what they have done, they have said that, look, I have enjoyed the benefit under section 140, that is your existing law, VAT, service tax, central excise, special additional duty, and few cases this. Wherever you have taken a benefit of input tax from the erstwhile laws to the GST law, they have shown a reduction of that rupee, that amount under section 140 on the face of invoice. This is discussed in your anti-profiteering. So, when the government reduces the rate of tax, when the government gives you a benefit of input tax, this should result in passing on the benefit of the taxation to the end customer. to the end customer. I'll give a classic example. Having been discussed, I'll give an example for you as a food for thought. When you happen to be an internal auditor, when you happen to be an auditor for a large organization, always when we do audit, companies do expect to give a benefit of passing on taxes. Let's do this math. Like say there's a service provider who is into cab services. Now, this service provider says, sir, I am not registered at GST. I wouldn't charge GST to you. Now, you, for a moment, examine the benefit of this GST input tax credit. Purchase of car, insurance, repair and maintenance. For a moment, let me assume that the cost of car is 12 lakh. Taxes. On this, 28% is my tax, cess of 12%. So the total value he pay to this particular manufacturer is 15,60,000. Now, this 2,16,000 can be claimed as an input tax credit. In addition, so there is a quarterly, there is an insurance. For commercial vehicles, the cost of insurance is very, very high. Assuming that on this, assuming that 15% happens to be the insured value, on that 18% happens to be my insurance, 32,400. Next, vehicle maintenance. Assuming that every 3 months there is a service, so assuming that average he spends not less than 60,000 on service. 60,000 on that, 18% is the GST. And this is paid for 4 quarters. 43,200 is my GST. Now, a person who is not registered and claiming input tax credit, you ask him to get registered and look at the input tax which got opened. Now, 2,91,600 is a total saving which is possible when a person happens to be a registered person. Assuming that 3 years is a contract, like large corporates, they have a contract that any vehicle which is attached to the company, 3 years should be the maximum life. After 3 years, it should not be used with the company. And this service provider also, they depreciate and they sell after 3 years. And assuming that every year he has to pass on this benefit, every year he has to pass on this benefit. Per car, there is a saving of 97,200. Per car, there is a saving of 97,200. This is for 3 years. And this is per annum. Look at this saving. You happen to be an internal auditor. Assuming that there are 10 cabs which are attached to a company, 97,000 per car into 10, 9.7 lakhs is a reduction in the rent charges which can be brought to the company by way of a input tax credit. Now, this is how I look at the costing when we do an audit with respect to a manufacturer, with respect to a service provider. Examine the cost sheet, examine the cost of operations, examine the status of registration, and look at the cost per hour, look at the cost per unit. And then there is a potential for you to apply section 171 to get the benefit of the input tax to the organization. So this is one takeaway for you from section 171. So this particular provision says that the government, central government, appoints an authority to examine whether the ITC availed by the registered person or when there is a rate of reduction. These two have resulted a commensurate reduction in price of this commodity or services which can be passed on to the end customer. This is the advantage of your section 171, right? Only 2 cases. One, rate of reduction. Second is your input tax credit which gets opened up. So where the authority who's after, like whenever a case is filed, like example, I was talking about noodles. When an individual has passed a case against noodles, the authority concerned, they'll call for the records. They examine, was there any reduction in price? And if there is a reduction price which was not passed on, then they say, look, you pay a penalty, which is nothing but 10% of the profit what you have made. Sir, is that the only thing? First and foremost, on the manufacturer, on the trader, the authority, whenever it is established that there is an anti-profiting established, they recover from that particular registered person, first element called 10% as a penalty. Second, whatever profited amount is there, this amount should be deposited with the authority. By this amount will be either paid back to the customer if traceable. If not, I deposit into the welfare fund. And when there is a customer who's identified, then 18% is the rate of interest. Along with interest, the money will be paid back to the buyer. So that's the reason. Always, I don't know how many of you remember. Our elders do say, whenever they purchase something, they take the bills and they keep the bills in safe. This generation, we take that bill, we just throw it off in the dustbin. If you happen to look at your parents, hard-earned money, whenever father purchases something, he gets that document, that bill, that invoice, he gives to the mother. And mother used to keep in a particular file. After some point in time, she used to clear all those bills. So this is where, when GST has come for the first time, people whoever have filed a complaint, a plethora of applications have been filed showing that, sir, I am purchasing this cartridge. We have seen live cases where the dealers who are dealing with this branded cartridges, laptop especially, where they haven't got the benefit of GST, they were sanctioned this amount of price reduction along with interest of 18%. Not only that, the government levied a penalty of 10% on this particular manufacturer. So what is the element of profit? The element of profit is on account of reduction in price or on account of input tax, which is opened on account of GST law. Now, the law says that chairman will be appointed who has authority, who is a person who's having a rank of a secretary to Government of India, like finance secretary, revenue secretary. So a person who has been holding a position of secretary to the Government of India will be appointed as chairman. Along with that chairman, there will be 4 technical members who happen to be a position of commissioner of state or central GST. Reason, whenever an application comes, they should know a macro level perspective, nature of business, what is the costing, from where we have to look in, whether the benefit of this rate reduction, whether the benefit of ITC which was opened, was this taken care. And this authority, initially it was appointed for 3 years, 3 was made 4, 4 was made 5. Now, like your section 172 passing on an order, every year they have been extending. Similarly, anti-profiting was also extended. As of today, this is in existence. The material which you have downloaded, students, it was wrongly typed as 4 years. Please recorrect that as 5 years. This we have discussed, benefit of tax or benefit of ITC. Now, what does the officers do? The authority who have been appointed, when they have been receive a case, they examine the case and they pass their duty bound to examine these aspects. Like, first and foremost, was there a reduction in price? And this particular reduction in price, was this passed on to the customer? If this was not passed on, then the officer will pass an order. Will pass an order for what? First, you reduce the price. Second, you pay that profit element back to the customer along with the interest of 18%. Third, you have to pay 10% of the profit. Fourth, the officer can go to the extent of cancellation of registration. Fifth, in this particular authority who have been formulated, every quarter, within a period of 10 days from the end of the quarter, they submit a report to the GST Council to say that I have received so many complaints, we have examined so many complaints, and this is a decision taken in those particular cases. So these all cases, wherever an order is passed, they go back to the High Court for an appeal, wherever there is a matter, the registered person does not agree with the anti-profiting authority. Right? There were a couple of other discussions in institute material. I've just taken the important aspects which is relevant for today's discussion on anti-profiting. From here, let's come to the important topic of today's discussion called returns under GST law. So here, whenever I talk about return, please keep in mind, returns are one window where your demand and recovery, section 73, section 74. Please make a note in your working note. Section 73, time limit 3 years. Section 74, time limit 5 years. I repeat, Section 73, 3 years. That is time limit to pass an order. Section 74, time limit of 5 years. My returns is going to be one mechanism where I can convince upon the officer that there is no suppression, there is no fraud, there is no intent to evade payment of taxes. So when I talk about returns, I have various returns. In the next slide, I'll show you, which could be one of the modem, one of the mechanism where I can avoid my penal provisions under 122 and all. Whenever a show cause notice is issued, a show cause notice under Section 74 is little dangerous. Section 73 is okay to fight with. Reason, Section 73 does not have 3 allegations: fraud, willful misstatement, suppression. I repeat, fraud, willful misstatement, suppression. These 3 elements are duly addressed when I file my returns promptly, when I match my turnover as per books of accounts with my returns. Right? This is the importance why we focus on filing of returns. And students who doesn't have experience or exposure in the due course of your articleship don't boggle much with the various sections and other things. I'll just give you a gist of what aspects we need to disclose and what is the relevance of a particular return. Now, along with the return, there is a statement. Now, they have used a language called written and a statement. Statement file, written. Okay. Statement, as you understand, statement is a summary of the transactions. Written is a compilation of the activities. This is just a summary of transactions. Whatever transactions I do, like example, sales. I have B2B sale, I have B2C sale. I compile all those transactions and issue, which is called as a statement. The written is a compilation of an activity. What is that I have purchased? What is that I have sold? The net of my output tax and input tax is disclosed in my written. So there is a thin line of difference between my statement and a written. Information to be furnished and the check mechanism for the departments. When we look at this section 61, 62, the assessment of a person who has filed not filed the returns, assessment of a person who has filed the returns, assessment of a person who has not filed the returns. Now, all these aspects draw from this returns part. Revision of returns as of today, not possible. And students who are paying for May 2022, you would not have listened to this recent budget. I would recommend don't even waste your time to read your budget. Reason so much of complexity has come in this budget 2022. You feel that filing of returns is so Herculean task that it is not an ease of doing business. November 2022, absolutely not to worry. Reason budget 2022 is yet to be approved and ratified by the Parliament and to be receiving President's assent. So for May and November 2022, absolutely not to worry about the budget amendments. Rectification is not possible under GST law. And there is something called late fee for non-filing of returns. Examination, expect 2 marks question from this topic called filing, applicability of late fee, computation of late fee. This is one topic along with my QRMP scheme. QRMP. This is one particular topic which you can expect from your May 2022 attempt. But for this, I don't see any other thing which could be tested. Now, overview of my returns. To start with, various returns and statements which are to be filed under GST law. ISD, Input Service Distributor. This is a return to be filed by a person under Section 20, where there is a setup of business, head office and branches at various locations. Example, sir, I'm a manufacturer. I have my manufacturing activity in Maharashtra. This product which is manufactured, I sell in East, West, North, South. How do I sell? I have my branches in, say, 15 different states. So what I do, all my common costs, like your advertisement fee, your audit fees, your directors, independent directors sitting fee, where I pay tax on reverse charge mechanism. Wherever I pay tax on common services, these common services I have to distribute to various branches. How do? I do under input service distributor. TDS, TCS, section 51, section 52. All the supply of goods and services to government undertaking, government entities, TDS under section 51, 1%, 2% is the rate of tax. TCS, 0.5, 0.5, 1%, where supplies are done through e-commerce operator. Final return. When I cancel my registration, when I surrender my registration, I have to file a return called final return. Non-resident taxable person, NRTP. Various forms. There are a couple of slides to explain what is the relevance of these forms. A person who has taken a non-resident taxable person, he does the assessment after his business is done and he submits a return called NRTP. CTP, composition return, section 10. A person who has registered a composition files a return on quarterly basis. For him, composition return has been prescribed. CTP, casual taxable person. A person who does an activity on an irregular basis in a state or a union territory where he does not have a place of business, there is a prescription for a registration called CTP and also a return to be filed called CTP. All other periodical returns like your GSTR-1, which is a statement to be filed under your section 37. GSTR-9 annual return, GSTR-9A composition. These are all periodical returns to be filed on regular basis. This is a macro perspective how we look at my returns under GST law. I have few examples for you to understand. Again, not from examination point of view, not from academics point of view. When you get qualified, when you get into practice, when you get into industry, when you get into practice, take it from me, GST is not going to leave you when you're in practice. At least when you get into industry, you must specialize in as a CEO, CFO. You can focus on few areas and you can outsource, but few areas do come for your decision making. So there are few examples which are connected with my returns. We'll understand these examples and then go to the returns part of it. First example, goods are supplied by Mrs. LLP and Co, which were written by the customer by issuing a tax invoice. How does the same to be disclosed by the supplier and recipient? Now, supplier is LLP and Co. Those goods are written. When the goods come back, look at your accounting. Look at your profit and loss account. In my profit and loss account, I have my revenue. In my profit and loss account, my credit side of P&L, I have a revenue. So I show sales, I show sales return. So I have sold goods worth 1 lakh. I have written back sales of 1 lakh. So sales of 1 lakh, sales return of 1 lakh, net revenue 0. But unfortunately, what happened here? The customer has sent back on a tax invoice. The customer says, look, I have taken into my books of accounts, I have increased my inventory. My inventory was increased. To reduce my inventory, I have to raise a tax invoice. So that fellow has sent back as a tax invoice. Now, how do I show in my returns? Should I show this as a purchase or should I show as a credit note reducing my supply value? This is a key important aspect which you have to deal with. I would recommend when you have received the goods back on a tax invoice, please consider this is an inward supply, take the input tax credit. Now, when you look from returns point of view, 1 month there is a sale, another month there is a purchase. I paid my output tax, I claimed my input tax credit. So this tax comes back to my electronic credit ledger. So what if my customer has not sent a tax invoice? So assuming he has sent on a delivery challan, show sale, credit note to be issued, sales return, net value of 0 in your P&L account. So this is the answer for your point number 1. Point number 2. Mrs. ABC Limited applied for registration in the month of Jan 2020. However, registration was granted in February 20, valid from the date of application. So they have given a registration which is valid with effect from Jan 2020. Should the returns to be filed for January or should the returns to be filed from February? So the answer for this question will be, since the RC was issued in February, my RC has been issued in February, the GST portal, when you log in, you will see the returns window open only from February. It will not be open for January. So what will happen to this concept called reverse tax invoice? You've taught us that from the date of registration till the date of issuing the RC, any supplies happen, I can issue a reverse tax invoice, I can collect taxes. You can show those transactions in the month of February and you can file your returns. Question number 3. PQR & Co. have their register office in Bangalore, that is Karnataka, and they have a branch in Chennai, Tamil Nadu. What are the compliances under GST if registration is sought only a branch? So, in Tamil Nadu, registration was taken. In Bangalore, registration was not taken. Should I need to register in Bangalore? Should I need to do something? Probably, I would say the concept of ISD would be looked upon where my credits which are billed to head office needs to be passed on to Tamil Nadu, and assuming that if there is any other branch, I can pass on from Karnataka to other units. So recommendation for registration of ISD, filing of returns of GSTR-6 from head office. Now, practical question, question number 4. So goods are received in the first week of April, but this dispatch was made by supplier in March 2020. Most of you would see this as a reconciliation item. So when I have been looking at my purchases, my supplier dispatched the material on 28th of March. These goods have come on 3rd April to my factory. In my GST portal, I could see supplier has already issued the invoice in March 2020. Physically, I received on April 2020. As a statutory auditor, my statutory auditor says, don't look book as a purchase. Conservative principle, I don't admit because goods received only on April, book this is a purchase for April. What can you do? Can I take the input tax credit in March? Answer is because you have received in April, claim the ITC as per section 16 in the month of April 2020. So what if my GST and ITC is reflected in GSTR-3B for March 2020? Don't worry, you show it in April 2020. So the moment I show in April 2020, my GSTR-3B flags red color. Now this is a practical issue. Even the GST department has no solution for this. If you give this particular GST law to Brahma, he will say, my dear friend, I have created a human being. I never thought this human being has got so much of thought process. He can evolve a law called GST, which is so complicated that even the lawmaker cannot understand. And this is a fact as on today, understanding my GST. Input tax availed partially by applying block credits. There is a formula where I have reversed more than what I have to reverse. What will I do with the balance credit? That balance credit you will claim back in the subsequent month, or you file a refund application for this mistake which has happened. Input tax credit on common credits availed by a particular branch were billed back to the other branch on a turnover basis instead of taking ISD registration. I would recommend section 20 talks about ISD. Don't raise a tax invoice to other branches. Go for ISD registration. So these are a couple of examples which you have to keep in mind when we talk about returns to be filed under GST law. So to start with, GSTR-1 is a monthly or quarterly return. What is GSTR-1? A statement of sales. I have a separate slide where I'll explain you what details I have to show in my GSTR-1. GSTR-2 is discussed in section rule 60, read with your section 38. Budget 2022 has taken out this GSTR-2. They felt that I had one thought process in my mind when I framed GST law. Unfortunately, this never took a dawn of sun because it was so complicated that I cannot bring GSTR-2. So they have happily removed this. GSTR-3B, I was talking about the app and chartered accountants case, where originally GSTR-3 was a written notified. Later, GSTR-3B has been notified as a monthly return under Rule 61, a quarterly return, which is under QRMP scheme. There is a separate slide which I have discussed about this QRMP scheme. Quarterly composition return, that is under Rule 62. A person who has taken a registration under Section 10 as a composition registered person, when I pay tax under composition scheme, I file a form called GSTR-4 for payment of taxes on quarterly basis. NRTP, that is non-resident taxable person, GSTR-5. Then moving forward. GSTR-6. My GSTR-6 is a form which has been notified for the purpose of ISD. So when I have to pass on input service distributor, I file a form called GSTR-6. Now, this is a monthly activity. Monthly on or before 13th, I file this form called GSTR-6. TDS return, it is a monthly return, GSTR-7, TCS, GSTR-8. So, person who is deducting TDS, he will file GSTR-7. Person who is recovering TCS, he will file a form called GSTR-8. Annual return GSTR-9, major amendment happened for May 2022 attempt, where they have abolished audit under GST law. Examination expect a 4 marks question. Reason, this is the last attempt. I repeat, this is the last attempt for testing this audit under GST law. So examination, your section 44. Section 44, expect 1 question from your annual returns under GST law. Final return, after surrendering my registration, I file a form called GSTR-10. This is called a summary return final form, where I'll show at the time of cancellation of my registration, what was my input tax credit, what was my input on capital goods, inputs in semi-finished goods, capital goods. I reverse that particular tax and close my registration. Now, starting with section 37, which talks about your GSTR-1. GSTR-1 is a statement for my monthly transactions. My sales which has taken place, outward supply which have taken place. I use a form called GSTR-1 to disclose this particular sales. So this is not applicable for ISD, input service distributor. For ISD, I use GSTR-6. NRTP, GSTR-5. Composition, GSTR-4. TDS, GSTR-7. TCS, GSTR-8. OIDR, separate form. So, my GSTR-1 is not applicable to all this set of people. Examination, you have MCQ. 30 marks is a weightage for your examination. Last session, which I take after customs. Wait and watch for the last session. I'll give you a few tips from examination point of view. MCQ are your lifesaver in your examination. People who feel, sir, GST is so complicated, ITD is so complicated, don't worry. You have 30 marks. Institute material is a Bhagavad Gita, Bible, Quran. Follow all your MCQs in your institute material and also the RTPs which are there. Please score well from your MCQ. So whenever they say this is not applicable for GSTR-1 MCQ, a registered person under section 51 has to file a form called GSTR-1 on a monthly basis. True or false? We will say false. So these slides wherever we say not applicable, these are tested for your MCQ. And the filing date, it was 10th. Later it was changed to 11th. Sorry, now it is made to 11th. There was one student, I don't remember his name, Devender or some person who was asking, sir, the law says that my GSTR-1 was not permitted to file between the period 11th to 15th. Now, this was the original imagination when the GST law was framed. Unfortunately, because GSTR-2 was not implemented, this provision or restriction was not brought into picture. As of today, my GSTR-1 can be filed Saturday, Sunday, public holiday, midnight, day, evening. Every day I can file my GSTR-1. So this restriction of filing 11th to 15th was not seen into picture. Now, so what I have to do when I file my GSTR-1? I have to file details of invoices issued during the month. Now, when I look at my transactions, now here, when we talk about returns, I would recommend all the students to upgrade yourselves with information technology. MS Excel, if you don't have knowledge, you're going to suffer a lot. Have your MS Excel to the extent possible for filing of these returns. So the GSTR-1 says that invoice-wise, show the transaction of B2B. So any goods which have been supplied to a B2B person, line-wise, I have to show those transactions. In addition to that, all my B2C transactions whose transaction value is exceeding rupees 2.5 lakh, I have to show invoice-based transactions. For what? Interstate supply. examination, again a MCQ. Again a MCQ. How does MCQ is tested? Mr. A supplied goods worth rupees 3 lakhs to unregistered person in the state of Tamil Nadu. It is an interstate supply. Details of this interstate supply, assuming that it is an intrastate supply. Details of all intrastate supplies need to be shown invoice-wise in GSTR-1. Answer will be no. Only interstate supplies whose value is exceeding rupees 2.5 lakhs, I have to show invoice-wise in my GSTR-1. So why this principle has come into picture? Under income tax, there was a PAN which was made mandatory. I don't know how many of you read this provision. Any document which was issued should carry a PAN where the transaction value is exceeding 2.5 lakh. So this was the principle when it was introduced under income tax. The GST also felt, let me align my GST laws with my income tax laws, where they say any invoice which was issued, which happens to be interstate supply, that is from a supplier is one state, recipient is in another state, then you need to show those transactions line-wise. So this is expectation from your disclosure point of view. Students, we are at 8 o'clock. Let's have a break for 5 minutes. We will resume back after 5 minutes. 8:05, we will meet back. So, the one point I would like to carry from here is MCQs. When you look at your MCQs, the most listed chapters from your examination point of view. Those are the chapters which are focused for your MCQ. 30 marks, like, see, match the following, true or false. Now, how do I set the question? It should be a question which is little intelligent. It should not be just for the sake of testing the student. And also it should be from your topics which are not frequently tested, like your assessment proceedings. Like, how many will remember what is the due date for filing an appeal? What is the time limit for filing a revision application? Probably those are the topics which are less tested from theory point of view, more tested from your MCQ point of view. You should have a strategy. Paper to paper, you should know how the questions are tested, where we need to concentrate. Again, I'm not just saying from examination point of view. You have to have a strategy for qualifying the exam, and also how do I make a survival out of the academics, what I've learned for this, right? From that point of view. So there are a few points which were asked by students. Let me just take a few questions and then I'll come back to my discussion. There are a few things which I have not touched upon. Yeah. Sumit says 150 is from your anti-profiting point of view, where company increases their margin. Yes, Sumit. What if the quantity has been increased to the extent of tax reduction for same MRP? I think that we will not be anti-profiting. Yes, Sumit. Like your noodles case, Sumit, like where the complaint has actually come. So 5 rupees I was paying prior to GST, and after GST I'm paying 5 rupees. Where noodles instantly came with justification that Maggi noodles has increased 20%. Now, I don't know how many of you recollect that advertisement. When this anti-profiting issue has come, it has actually got attention of media. Immediately they changed their pattern saying that Aapka noodles, your noodles has increased 20% more healthy. The noodles have seen the extreme ends. Like, one point in time, saying that there's a plastic component, it has dipped in its sales. Now slowly it has regained its thing. So always remember this sutra. What is not good, always have a survival. What is good, it will have a time of test to adopt and accept. Now, generally what the elders say, this is a good practice you have to follow. Very few have that seriousness to adopt and follow. And what they say is not good, it gets prevailed without your knowledge. Like the Western habits. Next. Sumit is asking this question, sir. Initial days, okay. I'll not name the brain. Okay, this is a brand which has got anti-profiting. Okay. Namit is asking a question. Sir, for May 22 attempt, audit under Section 44 is still there. No, Namita. This is the amended Section 44, August 2021. We are in Feb 22. So for May 2022, amendments happened till November 2021. So what I have in my today's slide, audit under Section 44 is omitted. So definitely you can expect one question from this amendment point of view. Rightly, Namita, you brought in one. All the amendments which took place till November 2021 will be tested. Of that, from returns point of view, annual return, audit by a chartered accountant, cost accountant. There is no more audit from financial year 2021 point of view. Wait and watch for 4 months question from May 2022. And if this question gets tested, credit goes to Namita for giving a tip for 4 months question. Coming back. So when I find my GSTR1, so one, they expect invoice-wise details. B2B, why I have to give, when I give this invoice information, then only my ITC credit goes to the buyer. So for the buyer to get the benefit of input tax credit, I have to give line-wise information in my GSTR1. Also, this interstate B2C supply, whose value is exceeding 2.5 lakh. Then consolidated details, all other B2C information, all your B2C information, that is your supply value, less returns, credit notes or debit notes. All that I club together and show as a consolidated transaction. So my B2C, sales of 10 lakhs, returns of 50,000. 9.5 lakhs, I'll just show. If it is intrastate sale, state-wise, rate-wise, I'll show separately. So this is the information I have to give. Similarly, my debit note, credit note in relation to B2B supply. SEZ supply, I show separately. So export transaction, I consolidate because exports I don't give invoice wise. I just show my port wise, transaction wise. I show in my exports. Details of outward supply auto populated from GSTR-1 that is into 2A, 2B, 4A, CA. Now 2A, 2B, this is a concept which is linked with my 3B, GSTR-3B. So when supplier files is written, the credit is auto populated into GSTR-3B from on the basis of 2B. Till December, till few months back, GSTR-2A was the base. After that, they've changed the base to 2B. Major amendments happened to GSTR-2B in the recent budget. So May 2022, November 2022, don't worry about your ITC. This GSTR-1 is used for auto population to composition dealer. This GSTR-1 is auto population for ISD return. GSTR-6, ISD, GSTR-4 composition dealer. So when I find my GST returns, there is a data which automatically flows to ISD, data which automatically flows to your composition. This point alone you can expect for MCQ. Moving on further. Now, due dates relevant. Expect one question QRMP. What is the quarterly return mechanism for section 37? Now, when I say returns to be filed, government has come with a proposition that returns can be filed on a quarterly basis, returns can be filed on a monthly basis. Now, for monthly basis, my 11th is the due date for filing GSTR-1 as of now. Examination, they will not ask you what is the due date for GSTR-1, what is the date for GSTR-3B. Reason, so many amendments, so many extensions, it is not easy for to remember due dates. So I would say, sorry, please don't ask the due dates. Don't burden the students on the due dates. Even the practitioner, like someone asked me, Praveen, what is the due date for the GSTR-1? I would say, let me ask my article assistant and come back. Reason, so much of changes do happen. Now, this GSTR-1, they say that, look, I will not permit you to file your GSTR-1 if at all, you have not filed your GSTR-3B for the last 2 months. So, there is a condition brought in. If a trader, if a manufacturer, if a service provider happily files GSTR-1 but not files GSTR-3B. Now, GSTR-3B is a mechanism where the tax payment goes to the government. So this particular vendor, the registered person who doesn't file his GSTR-3B, that means that he is not paying taxes to government. So the government has brought a condition. If you delay for 2 months, that is to not file GSTR-3B, I will not permit you to file your GSTR-1. This is in case of your monthly return. Quarterly return. Now, my quarterly return, when I say quarterly return, month 1, month 2, month 3. So there are 3 months in a quarter for which this government has brought in this mechanism. Students, please don't curse me why the returns are so complicated. I'm just doing my job of clarifying how the returns are working. Now, if it is really complicated, law was framed such a manner. Ease of doing business. Now, for each and everything, government says that, look, for ease of doing business, I have brought in this return filing mechanism. So the section 37, read with rule 61, it says that a return should be filed on a quarterly basis. How? For month 1. There is a statement called IFF, if. What is this if? Invoice furnishing facility. Invoice furnishing facility for a supplies made to a registered person. So the government felt that the assessee who's having a turnover less than 1.5 crore, annual turnover, aggregate turnover less than 1.5 crore, aggregate turnover which is less than 1.5 crore. This particular registered person can opt for filing quarterly GSTR1. And while filing quarterly return, there is an abbreviation called IFF. What is IFF? Supplies to B2B person. So the government has said that for month one, you file this IFF up to supplies of 50 lakh till 30th of subsequent month. So ideally monthly return I have to file on or before 11th. But in case of my quarterly IFF, I was given time limit for 13th of subsequent month. So if assume April, May, June of 2021, April 21, I'll file IFF where all my B2B only up to 50 lakhs I can furnish. Moving further, month 2. Again, month 2, I'll be permitted to file IFF, that is due date till 13th for that particular month. Next, third month, that is June or September or December or March. The third month, they are saying that you file your GSTR1. Whatever B2C transactions, whatever other transactions are there, which are not coming in your IFF, that is, IFF contains only registered person transactions. All those transactions come in month 3 by way of a GSTR1. Examination. Please expect a MCQ question from your IFF. What do they ask? A registered person needs to show B2C transaction of an interstate supply exceeding rupees 2.5 lakh using IFF. You will say true or false. You will say false. Reason? IFF, Invoice Furnishing Facility, is a mechanism only for B2B transaction, not for B2C transaction. So expect 1 mark MCQ from IFF. Whatever you're listening to me, this is going to help you for your MCQs point of view. So this particular dealer who's filing his GSTR1 on a quarterly basis, for month 1, he will file IFF. For month 2, again IFF. For month 3, he will file something called GSTR1. Namita is asking this question. Sir, is IFF can be filed on 16th of subsequent month? You file on 20th. Portal will allow. But the due date is 13th. So answer to your question, Namita, I have to file my due date on or before 13th. Sir, if I file 14, 15, 16, portal will allow you to file. Only thing is, the data to your customer will not come. So when I'm talking about these due dates, I'll explain you the importance of these due dates. Let me come to my Excel file. Flow of ITC. Students who have exposure to returns, who don't have exposure, please understand this way. Now, see, the law has been framed in such a manner that there is a GSTR1. This GSTR1 talks about sales. So when a supplier files his GSTR1, that data comes into GSTR. When a supplier files his GSTR1, it comes into GSTR2A or GSTR2B. And this data, on the basis of time valuation, it goes to GSTR-3B. Now, here I'm talking about due date. Right? Scenario 1. scenario 2. R1, R2B, R3B. Now I'm using abbreviation GSTR-2B, GSTR-3B. So what the mechanism happens? Let us take example of say April 2021. April 2021. I'll say RP1, register person 1, register person 2. Now, register person 1, for a moment, Namita, assume that 11th May 2021 is the due date. 11th May 2021 is the due date. And register person files is written on, okay, my due date, I'll mention here, 11th May 2021. So register person is filed is register R1 on 11th May. Register person has filed is written on 13th May. Now, or for ease, I'll say 14th May. 13th you have IFF. Now, register person 1 has filed is written on 11th May. And second register person is filed written on 14th May. Now, GSTR-2B is a window where all the credits come here, and from GSTR-2B, there is a filtration which goes back to GSTR-3B. So, GSTR-2B will be updated for April 2021. GSTR-2B for RP2 will be not updated. Now, what happens here? Because the vendor has come after the due date. Now, in case 1, vendor has filed is written within the due date. The data has flown into GSTR-2B in RP1 case. So here, ITC is available. ITC is available. So in case of your R1, what happens? The credit from RP1 goes to 2B, validation success comes to 3B. In case of RP2, my GSTR-2B is like a watchman. Look, you came 10 minutes early, I'll let you inside. You came exactly 10 o'clock, again, I'll let you inside. You came 10 minutes late beyond the scheduled time, I'll block you. I'll not allow you inside. So my ITC in 2B is not updated. And ITC in 3B, ITC is not available. So my return for GSTR-3B, I'll not credit from RP2, register person 2. So this is a mechanism of your due dates, Namita. So if you ask this question, so can I file after the due date? 100% you can do. What will happen? It will not allow you to go one step further. Now the one step, now question comes here. So what will happen to this credit? This credit, what will happen? So this particular credit, it will come to my, this particular credit will come to May 2021 window. So whatever returns were filed after due date, system will accept. So it will not filter for that month, it will flow for next month. So this is the importance of your filing of a data within the due dates number. Right? I think Devender is one student who asked this question long back. So that's the importance of filing the data within the due date and how the data transmits from one return to another return. So here the data filed within the due date goes to 2B and that data gets filtered to 3B. So if we delay this month, it will block, it will go and allow in the next month. Coming back. Now, these are the due dates of relevance of IFF. Examination, expect one question from IFF from this point of view. Now, this I have discussed at length. I'll skip this for paucity of time. Now, GSTR-3B. GSTR-3B is your monthly return. Let me go to the next slide. Now, after GSTR1, Section 39 is your next written called GSTR-3B. So this particular GSTR-3B, Section 39 talks about right now GSTR-3B. This is a written I file. This is a written I file under Section 39. Again, this is not applicable to ISD. Why? ISD GSTR6. NRTP, printing mistake as a typing mistake, non-taxable resident person, non-resident taxable person. I file GSTR5, composition GSTR4, GSTR7, GSTR7, GSTR8, and separated for OIDR. So all these people, again, MCQ question, they need not file GSTR3B. The due date for filing respective GSTR9, 20, 21, 22, depending on the states, there is a different date. So I'll not bother you much with GSTR3B. So in this GSTR3B, what happens? My disclosure happens to tax payable on various supplies, including RCM. My tax payable, that is outward supply, zero rated supply. Then you have here RCM. The government wants to know what is your details of taxable supply. So I sold goods within the Karnataka. I have been registered in the state of Karnataka. So all supplies in the Karnataka, all supplies outside Karnataka within India, outward supply. So supplies to SEZ, supplies exports, zero rated supply. So I have received some goods and services where I have to pay tax on RCM. So all the transactions where the tax is payable, this will be shown in 3.1a, 3.1b, 3.1c. So this is the details of transactions of domestic supply, zero rated supply, reverse charge mechanism. Then zero rated supply, non-payment of GST, without payment of GST. Zero rated supply with payment of GST, one table. Without payment of GST, one table. Non-GST supply. Sir, I have goods and services supplied which are exempted, on which I don't pay GST. Show separate table. That's called non-GST supply. Then input tax credit availed, input tax credit reversed. I show this information. So when I look into my GSTR3B, the taxes I have to pay. Why I have to pay? I made a supply. I made a exports. I received some goods and services. So this information on taxes payment. Next transaction, my export of goods, my supplies to SEZ without payment of tax, separate column. Then I have my exempt supply, non-GST supply. All this under one particular table. Next is your input tax credit. For that particular month, what is the credit I have taken? What is the credit I have to reverse? Now, when I look into GSTR3, it shows import of goods, import of services, ITC on reverse charge mechanism, ITC receipt from ISD, all other ITC. So various clauses for my input tax credit. Reversal, Rule 42, Rule 43. Vignesh sir has already discussed. Rule 42 for your input and input services. Rule 43 for capital goods. All other ITC, that is Section 17, where there is a blockage of credits. All those cases, I'll show my details in my form GSTR-3B. Now, I'll come to this particular slide. Where we talk about due dates relevant under GST law. Now, this particular notification 8 talks about what are the due dates for a person who has to file return. Remember, I was talking about QRMP scheme. So there is a scheme where I can file my GSTR-3B on a monthly basis. I can file my GSTR-3B on a quarterly basis. Examination, a theory question. Can a return under Section 39 be filed on a monthly basis? Can be filed on quarterly basis? So answer is yes. A return under Section 39 can be filed monthly, can be filed quarterly. Expect a MCQ or expect a theory for 4 months. Now, monthly. Any person who has got an aggregate turnover exceeding ₹5 crore in a previous year, any person who has got a annual turnover, aggregate turnover exceeding ₹5 crore, he has to mandatorily file return on a monthly basis. Or a person who has opted for filing GSTR-1 on a monthly basis. So, I'll give an example. Sir, I'm a registered person. I have a turnover less than 1.5 crore. I can file IFF, but still I have not opted for IFF. Though it is a quarterly filing mechanism, I opted for monthly filing. So if I am a registered person who is filing a GSTR-1 on a monthly basis, I have to mandatorily file my 3B on monthly basis. The next slide, I have a provision containing this. Examination point of view, MCQ. GSTR-1 filed on a monthly basis, having a turnover less than 5 crore. Can the GSTR-3B filed on quarterly basis? Answer will be no. Because you are filing your return on monthly basis, your GSTR-3B also has to be filed on a monthly basis. Next. Who are supposed to file quarterly basis? A registered person whose aggregate turnover in the preceding financial year is less than or equal to 5 crore. So if it is exceeding 5 crore, I'll jump to monthly. And who has opted to furnish return on QRP basis under Rule 61A. So if I have chosen to file my IFF, then I'll be a person who can file my return on quarterly basis. So what if last year turnover is less than 5 crore? This year the turnover is jumping for 5 crore. So in a particular quarter where your turnover is exceeding 5 crore, the next quarter onwards, you will jump from quarterly to monthly. Now, examination point of view, this is the only slide, GSTR-1, GSTR-3B. This is the only two slides you can expect from your examination for either 4 marks or 2 marks. Next to annual return. Let me see if there are any questions so far. Okay, there are no questions. Next. This is one slide where I was talking that I was mentioning about your monthly return. A registered person who has got a aggregate turnover up to 1.5 crore and who have furnished GSTR-1 on quarterly basis. So, condition 1, turnover is up to 1.5 crore and GSTR-1 quarterly basis. So, he can file GSTR-3B quarterly basis. Right? Next. A registered person having turnover up to 1.5 crore but who have furnished GSTR-1 on monthly basis. So this is what the MCQ was telling. Now, for GSTR-3B, 5 crores was a threshold turnover. For GSTR-1, 1.5 crores is the threshold turnover. So having a turnover less than 5 crore, I can choose to file a monthly return or quarterly return for GSTR-1. So what if GSTR-1 is filed on monthly basis? Then you have to file your GSTR-3B on monthly basis. So it is too complicated. Don't worry. Leave this 1 mark. Go ahead happily. And if the turnover is more than 1.5 crore and the turnover is up to 5 crore, then I can file my quarterly return for GSTR-3B. Now, again, this is a concept where they say you can rectify your return. Unfortunately, this rectification is not seen the dawn of sun till date. It is not brought into picture. Budget also they talked about rectification. Nothing is there as of today. Skipping of returns. Sir, can I skip January, February? I'll file March return. Why? January, February, nil return. I don't have transactions. So my law says that you file nil return to file your March return. Unless you file your previous month return, this month return cannot be filed. You cannot pick and choose. Now, GSTR-1 or GSTR-2B is the basis for data which is auto-populated in Part A. That is, as on today, students, my entire GSTR-3B is auto-populated on the basis of GSTR-1 and 2B, barring your import transactions. Now, this circular has explained, it's like your Vajrayuda. So what all mistakes I have done, I can use this circular to rectify those mistakes. So I have reported, figures are to be reported on net basis in GSTR-3B along with past period. Figures have to be reported on net basis in GSTR-3B along with past period in the current month. Like example, so when I'm filing my GSTR-1 for April, I have to show a particular sale transaction. My marketing fellow gave an invoice. I forgot to take that invoice in April month. What I have to do? In May month, please include the transaction. Please pay the tax of April month in May month. When I file my GSTR-3B, it doesn't show this turnover, is it for April? This turnover, is it for May? So any of my previous month's transaction, I can bring it to this current month and I can pay the taxes. No negative entries are permitted. No negative entries are permitted in 3B. Like example, so in April month, I made an interstate sale for 1 lakh. 18,000 GST was charged. In May month, that sale has come back as a return. Unfortunately, when I look into May, my interstate sales is 0. When I file my GSTR-3B, I have only sales written. I don't have anything else. Can I show negative 1 lakhs in my GSTR-3B? Answer is no. My GSTR-3B is only allowed for positive figures. So this negative figures I have to carry forward. To next month when there is a positive figure which is going to come. So whenever there is a positive figure comes, then I can adjust. So what happens? In the month of March, I have 50,000 my turnover. So this 1 lakh which is carried forward from April, I can carry forward to June. Let me come to my Excel to make it clear for this negative. April 21, May 21, June 21, July 21. Transaction disclosure. Sale of rupees 1 lakh. So I'll disclose turnover of rupees 1 lakh. Sale return of rupees 1 lakh. No negative figures are allowed. So because my negative figures are not allowed, what I will do? I'll show nil transaction for May 21. June 21, turnover of rupees 50,000. So what I will do? Adjust 50K of April 21 and show no turnover. July 21, turnover of rupees 2 lakh. What I do? Adjust balance turnover of 50K of April 21 and disclose turnover of rupees 1.5 lakh. So this is what my GSTR-3 is capable of. As of today, if you have any sales written to be disclosed, the portal says that, look, you cannot enter any negative figure. Please carry it forward to the next year. This is what they talk about. Naveen is having this question. So in case of capital goods, input tax is to be availed for 5 years and 5% per quarter. So the credit, so to credit the same, to credit ledger, I'll input 100% credit in 3B, and while setting off, only 5% is to be utilized. Am I right? Answer is not that, Naveen. See, for capital goods, I can take the credit, like law assumes that life is 5 years, right? So whenever I receive capital goods, assume the value of capital goods is 1 lakh, Naveen. On 1 lakh, 18,000 happens to be credit. You take entire credit of 18,000 upfront. Law does not restrict you. Assuming that in between that 5 years, if you happen to discard the asset, then you have to calculate monthly how much is the credit eligible and what is the credit I have to reverse. So that 18,000 should be spread over 60 months, and how many months you have not used, those months I'll calculate for section 18. That credit I'll compare with the taxable value, whichever is higher, I reverse. This is a provision again. If you still have a doubt, don't hesitate, you can ask me that. I'll explain once again. Namita is asking this question. Sir, if we skip some months return, then interest under section 50 will also be applicable. If you skip few months, if you have a tax to be paid, interest under section 50 is applicable only on the tax paid through cash ledger, not through credit ledger. Right? That is what we have to understand. So skipping of returns rule applicable same for quarterly return also. Yes, Namita. If I skip IFF for this month, I have to file for next month. I cannot file until all the returns are filed. Naveen, hope this is clear. You have any doubts, please ask that particular point. Now, adjustments may be carried forward due to limitation of claim for refund may be sorted. Now, this example which I was talking, where I had a sales return of 1 lakh. So what if I have a turnover? I'll adjust. Sir, I don't have a turnover. I made an interstate sale in the month of April, May, June, July. There was no interstate sale. I asked my marketing fellow, do you have any orders for interstate sale? Marketing fellow said, sir, there is no interstate sale. That case, the provision says that if you cannot adjust, make the adjustment by carrying forward, claim a refund for that particular tax. So this example, what we have discussed, whatever that 18,000, 1 lakh transaction was there, if I don't have any such transaction, you file a refund application. Then, any transactions which you have not disclosed in your GSTR-3B, that can be disclosed through GSTR-1 in the appropriate table. Law mentions that, but there is no mechanism to rectify GSTR-3B through GSTR-1. Next. In line is your composition return. My composition return is filed under Rule 62. This is a quarterly return. Every quarter I file GSTR-4. Now they have replaced CMP-08 should be filed on or before 18th. And this GSTR-4 should be filed on or before 13th of April from the end of the respective financial year. So a composition person pay tax through CMP-08 and due date for making the payment is 18th of subsequent month. In this CMP-08, there is an inward details auto-populated based on your GSTR-1. Based on your GSTR-1. So if details are missing, do a manual entry. And nil return has to be filed. Without filing the previous month, I cannot file the current month. Non-resident taxable person. Written file, GSTR file. Examination, don't expect any questions now. No monthly statement, no GSTR-1, no this form to contain what is the sales you have made, what is the purchases you have made, and pay the respective taxes. If you have delayed in making the payment, pay respective interest, and if there is any demand of penalty, pay that also. This return has to be filed within 20 days. Recent budget, this 20 days was amended to 13th. Recent budget, there was an amendment of from 28th to 13th. Examination, just remember that this is 20th. Now, GSTR-6, that is your ISD return. GSTR-6, which has to be filed on a monthly basis. My due date is to be filed on or before 13th. And this is for credit distribution. So where there is a head office, where they have taken ISD registration, for passing on the credit of common services to the respective units, they need to file on or before 13th. On the basis of this data, my GSTR-2B is updated. And this credit goes to my GSTR-3B. So what if I file this return on 14th or any date after that? So what will happen? Instead of going to the respective month in this month, it goes to there is a delay of 1 month. there's a delay of 1 month for credit to actually reflect. So if I file my April month on 15th of May, so this credit of April, instead of coming into 3B in April, it goes into May month. That is the only impact I have as on today. TDS, this is a form which is to be filed under section 51, that is government agencies. The due date they have prescribed is on or before 10. Not much to discuss on this. TCS, not much. This first return is not invoked as on today. E-commerce operator, TCS return. GSTR 7 for TDS, GSTR 8 for TCS. Again, due date is 10, which they have to file. And whatever tax was paid by this GSTR 8, the tax should be paid through cash ledger, and the credit also comes to electronic cash ledger of the recipient. Annual returns. Expect one question, students. As Namita rightly pointed out, very important from your May 2022 point of view. Section 44, somewhere in August 21, there was a major amendment happened. This provision says that annual return should be filed in form GSTR-9. GSTR-9 is your annual return, and reconciliation statement 9C. 9C is a reconciliation statement. Now, this annual return is not required for CTP, not required for NRTP, not required for ISD. Why? CTP, temporary, not for full year. NRTP, again temporary. ISD, just a credit distributor. MCQ, you can expect one question for MCQ. A person registered under composition scheme, filing of annual return is mandatory. Yes or no? I'll say no. A registered person having a registration under ISD has to file his annual return. Answer is no. Person who is authorized to deduct TDS, TCS, OIDR, this person also not required to file annual return. Now, this you can expect one MCQ question. Annual returns to be filed on or before 31st December as per the law, but actuality, every now and then this gets extended. For financial year 2021, as of now, the due date is 28th February. God knows what happens on 28th February. What folks, the finance department, as of now, 20th 2022 is the due date. There is no sanctity of due dates under GST law. It's like no procrastinating. We always take a promise on New Year Day. I undertake to do so and so for this particular year onwards. But the next day, very next day, everything goes off. So due dates under GST law is something like that. Now, one thing I would caution students, like examinations point of view, be little diligent on a regular basis. Attend the classes on a regular basis. Do as much as of R&D. Ask as much as of silly questions or main questions. Ask in your classes. For the reason, examination, you are not expected to do any sort of R&D. Time is very precious. 3 hours, how do you protect your 3 hours is very important. And especially MCQ. Your entire scoring comes from MCQ. Reason, very simple and very easy to score. Your institute material and your scanner, that is your RTP, those are the scoring points. Coming back, annual returns under GST. So with effect from financial year 2021, my annual return along with reconciliation statement under 2044 should have audited statements. Let me come to my Excel to make you understand this. With effect from financial year 2020-21, annual return along with reconciliation statement and audited financial statements are to be filed under section 44. So this is a change point which was this is a change point which was brought under section 44. On the basis of threshold limit annual return along with the self-certified. Now, this term self-certified is important. Reason, till financial year 2021, a reconciliation statement duly certified by a CA or CMA is mandatory. Now, this provision was relaxed with effect from financial year 2021. August 2021, this amendment was brought in, and this is first time May 2022. You are going to write your examination. So, what you have to keep in mind for section 44, with effect from financial year 2021, filing of annual return. I will say annual return GSTR-9. Filing of reconciliation statement GSTR-9C, along with signed financial statements. So, audit of reconciliation statement by a CA, CMA is not mandatory, has been done away with. So, examination, you can expect a question. Examine the provisions of section 44 for filing an annual return along with a reconciliation statement or a MCQ. Filing of a reconciliation statement to be certified by a cost accountant, chartered accountant for financial year 2021, true or false. So, this set of questions you can expect from your examination. Now, final return. This is the last return which we file when a registration has been cancelled. I opt for cancellation of my registration. So before I get out of GST, a form under GSTR-10 is a return to be filed once your registration is cancelled, where I disclose that these are the input services I have on, inputs and capital goods on which this is a tax which I have to pay. And I'll debit that particular tax from my return concern. Next, late fees. Section 46 read with section 47. 47 talks about your late fee. There was an amnesty scheme. I think Akshay asked some point in time. So what do you mean by amnesty scheme? So there was an amnesty scheme where the government has utilized this power under section 164 to notify a class of persons under this amnesty scheme not to pay late fees. And this actually boils down the honest taxpayer. This amnesty scheme is encouraging the dishonest taxpayer and it is discouraging the honest taxpayer. Assuming that you are a honest payer who has been filing returns every month, for some reason, 1 month you have delayed for 2 days, a late fees of 100, 200 has to be paid. The same person, assuming that he has a friend who has not filed for last 2 years, suddenly government comes with a amnesty scheme saying that whatever late fee is there, waived off. What happens to a registered person who is diligent in paying his returns? Whatever late fee has paid, there was no mechanism to claim a refund. There was no provision to give a refund back to that registered person. And this default taxpayer who has been not filing returns, he'll come all of a sudden in the amnesty scheme, he'll file returns, get away with interest or late fees. Unfortunately, this is a law, we have to live with this. And if you remember, there is a mechanism called this Sabka Vishwas, SVLDRS, Sabka Vishwas Legacy Dispute Resolution Scheme, where government has given a waiver of 40%, 50% of the taxes collected. Public money. Assuming I am a service provider, I have registered a service tax, I have collected, say, 1 crore as service tax. And if I come forward to pay this scheme under amnesty scheme, Britannia 50-50, like you pay 50 lakhs service tax, don't pay the balance 50 lakhs, don't pay interest, don't pay penalty. Now, whose money is that? Why government has to come with an amnesty scheme? Instead of punishing this defaulter, they encourage this amnesty scheme. And most of the businessmen, they know that I get registered, I collect tax, I don't pay, some sort of amnesty scheme is going to come. I'm not encouraging this attitude. I'm just putting across the fact what happens through amnesty scheme. But again, having a professional qualification, having a responsibility casted on us, we should encourage the person who has to pay taxes in timely manner. And you have to assist them in terms of determining what are the compliances they have to follow. This is expected from a professional, right? We have a paper called Code of Professional Ethics, Code of Conduct. So we have to choose a right path to guide in a right direction. And this is a law. We don't have a choice. Let's live with this law. So this provision says that a registered person who has failed to file a return, GSTR-9, GSTR-3B, your annual return or your final return, a notice will be issued for him to file a return within a period of 15 days from the due date where there is a default. So what if the person doesn't pay, doesn't file within the due date? Then law says that late fee can be collected as ₹100 for every day or maximum of ₹5,000. So under section 37, GSTR-1, GSTR-9 or last return. If you have not filed your returns, I can pay ₹100 for every day of default. ₹100 under CGST, ₹100 under SGST. Maximum of 5,000 under CGST, 5,000 under SGST. So this is a capping with respect to my late fees. Similarly for your annual returns. So what if I'm a registered person who has to pay, who has to file my annual return, but I have defaulted. Similarly, you pay ₹100 for every day under CGST, ₹100 under SGST, or quarter percent of your turnover, 0.25% of turnover, whichever is lesser, that amount will be collected from you as late fees, right? So these are certain provisions with respect to your late fees. Let me come back to your questions. Namita is asking this question. Sir, how AO conclude that sales return adjustment is genuine? Is some documentary evidence required? Let me just clear these things. Yeah. Fantastic question. Practical application point of view. Namita is asking, sir, in case of OIDA service, in case of a sales return, if I file a refund application, what is the documentary evidence I need to upload? And how does this officer concerned knows that this is a transaction where I'm entitled for refund? So in case of your sales return, Namita, I have a sales return. This particular sales return which has happened, sorry, there is a technical hiccup. Yeah. So in case of a sale return, Namita, your sales invoice along with that sales return. Now, invoice has gone to the customer. Was there an acknowledgement from customer that this material was rejected? Was there delivery challan from your customer that these goods have come back? Was there an e-way bill for outward? Was there e-way bill for inward? Was there a transport copy to show goods have gone, goods have come back? In case of a goods. In case of services, some sort of email correspondence or some sort of confirmation from the customer that he has not accounted the bill and it has been sent back. So I issue a credit note along with the confirmation from the customer that he never paid or he never took the credit. All this documentary evidence I have to enclose together to claim that this is a genuine transaction for claiming a refund, right? So that is the particular documentation I have to give in this particular regard, Namita. Next. There is a next question. So, composition supplier return, if the return for June quarter not filed, then we cannot upload return for September quarter. Yes. If you don't file for one quarter, Namita, definitely it is going to block my returns for the other quarter. So mandatorily, I have to file the previous quarter, then only I can file this particular thing. If I don't have transactions, then file your nil return. This is the suggestion I would give. Next. Vinith is asking this question. Sir, if a registered person is a regular defaulter, will the registration be cancelled and returns will be allowed? So it is a valid question. If there is a continuous default, your returns will be blocked, your cancellation will be, registration cancellation will be done. So there is a mechanism to file this particular returns. Till the date of cancellation, you can file your return. Right? Next. So what why OIDR service provider not to file annual return? OIDR, it is a policy decision, Namita. So law says that it is not required. What does reconciliation statement contain? Namita is asking this question. Reconciliation statement is nothing but a reconciliation between my GSTR-9 and financial statements. My GSTR-9 consisted turnover of say 120 lakhs. My signed financials consisted turnover of 90 lakhs. 90 lakhs in financials, 120 lakhs in my GSTR-9. Why there is a gap of 30 lakhs? I'll say that, sir, in my GST returns, I paid GST on sale of fixed assets. I sold a fixed asset for 20 lakhs, but this 20 lakhs didn't came in my financial statements. I show profit or loss only in my financial statements. Or, sir, I have distinct percent, no stock transfer. I showed for GST purpose, but not shown in my financials. So this sort of reconciliation, Namita, I show in my GSTR 9C. Last question for the day. We are at 9.3. Sir, if assessee does not pay GST for some months, I think this question has not come completely, Namita. Don't worry, you post back your question, Namita. I'll take up this question in the next class. So students, with this, I'll end my discussion on GST with this topic called returns under GST law. We have next sessions coming in the next week on customs and foreign trade policy. Till then, see you all. Good night, goodbye, and Jai Hind.